नमस्कार दोस्तों, स्वागत है आपका कमोडिटी अपडेट्स में।
If you've glanced at the commodities page anytime recently, you know exactly why we're here today. Gold prices haven't just been climbing, they are absolutely surging. We're seeing genuinely stunning record highs.
Right. And the usual explanations, things like standard inflation or just typical market jitters, they don't really get to the heart of it this time.
Not at all. They don't even begin to cover the full story. So we've pulled together a whole stack of sources. We've got World Gold Council reports, some really deep dive financial analysis from firms like Goldman Sachs, and we're going to zero in on what looks like the real engine under the hood of this whole surge. So this deep dive is all about understanding one core relentless driver, and that is the sustained strategic buying spree from China's central bank, the People's Bank of China, or PBOC. Okay, let's unpack this.
And I think we really have to stress that word sustained. This is not a market blip. It's not just some opportunistic trading.
Yeah.
Understanding this persistent official sector demand is, it's absolutely critical.
Why is that? Why is it so critical right now?
Because it provides a kind of foundational stability to the gold market that, frankly, we haven't seen in decades. It tells all of us, that the current price level is being supported by long-term strategic policy, not just, fleeting investor sentiment.
Right, a policy decision.
Right.
And the headline finding that really anchors this entire conversation is it's staggering in its simplicity and its scale.
The timeline.
The timeline. China's central bank has officially extended its gold buying streak to 14 consecutive months.
14 months. That's a huge policy commitment.
Right.
It's a real measure of conviction.
Conviction, that's a good word for it.
It is. I mean, central banks are not typically known for chasing market trends, right? They're reserve managers. They act on these decades-long strategic time horizons. So for the PBOC to maintain such a consistent buying pattern month after month for over a year, that really indicates a fundamental shift.
A shift in what, exactly?
A shift in how they view their national reserves and, maybe more importantly, the entire global financial system.
And that conviction is what we need to visualize for you, the listener. So let's dive straight into the numbers, the data points that really define this 14-month strategy. According to the reports we analyzed, this whole buying cycle kicked off back in November of 2024.
Right, so we're well over a year into this now.
Exactly. And if we just look at the most recent snapshot from last month, the PBOC officially increased its bullion holdings by a little over 30,000 troy ounces.
Which, on its own, might not sound like a market-moving number for a single month.
No, but the real story is the accumulation, the consistency. Since that start date, November 2024, the total confirmed purchases have hit about 1.35 million ounces.
And that figure, 1.35 million ounces.
Yeah.
It's worth putting that into perspective. To give you a sense of the sheer physical scale we're talking about, that translates to roughly 42 tons of gold.
42 tons.
42 tons, all accumulated over this 14-month period. Think about that. 42 tons is the weight of seven adult male African elephants.
Wow. Okay, 7 elephants worth of gold.
Yeah. All of it moved out of the market and put into storage as hard currency by a single nation's central bank.
That contextualizes the magnitude perfectly. And that's why this trend is so directly correlated with the record gold prices we're seeing. This sustained, non-volatile demand from a huge player like China, it acts as an incredibly reliable pillar supporting that price floor.
The bedrock.
A bedrock, exactly. When retail buyers or maybe institutional traders might get nervous and pull back.
This official demand is just consistent. It's there, month after month. If you think of the market as a building, this official buying is the foundation.
And that prevents the kind of huge corrections we might otherwise expect after such a strong rally.
It absolutely does. It sort of establishes that this is where gold is meant to be trading, based on a sovereign strategic consensus.
Okay, so that brings us to the next layer. Here's where it gets really interesting, because China isn't operating in a vacuum here, is it?
Not at all.
This seems to be part of a much bigger kind of global reserve realignment.
Yeah, if we connect this to the bigger picture, the PBOC's actions are really just the most consistent, maybe the most visible example of a trend sweeping the official sector globally. We're seeing synchronized accumulation.
Synchronized. So other central banks are doing the same thing.
Very much so. The World Gold Council research we looked at is it's pretty astonishing on this point. It shows that central banks around the world bought nearly as much gold in late 2025 as they did during the first 8 months of that same year combined.
Whoa, okay, say that again.
In just the last few months of 2025, They bought almost as much as they did in the first 8 months put together.
That's a massive acceleration. So the pace isn't just steady, it's speeding up dramatically.
It's speeding up. This is not a localized, China-specific blip. It's a structural realignment among sovereign treasuries.
Which, of course, begs the critical why question for our listener. You might be wondering, if everyone is rushing into gold at once, doesn't that sort of defeat the purpose? Why is gold suddenly the asset of choice over, say, other major currencies or sovereign debt?
And that really is the essential question. The rush does raise the price, of course. But the utility of gold in this context, it isn't just about market returns. It's about strategic risk mitigation.
Risk mitigation.
Hedging, specifically hedging against currency exposure. The core strategic motivation for this central bank buying for China and for, dozens of other nations is that bullion is seen as a crucial non-sovereign hedge.
A hedge against what?
Against the continued dominance and I think the perceived future vulnerability of the U.S. dollar.
Ah, the dollar hedge. We hear that term a lot, but what exactly are they hedging against? Is it just U.S. inflation, or is there a deeper geopolitical calculation happening here?
It's much more about the geopolitical calculus today. That's what's driving the urgency. They're hedging against risk factors tied to holding too many of their reserves in a currency that can be weaponized.
Weaponized through sanctions, for example.
Exactly. Or just affected by the domestic policies of another nation. Gold carries no counterparty risk. It can't be frozen or sanctioned in the way that dollar-denominated assets can.
So it's about financial sovereignty.
That's the perfect way to put it. So when a country like China or Turkey or India consistently puts huge amounts of capital into gold, it's a statement. It's a statement about perceived stability. Specifically, the stability of an asset that's outside the control of the global financial architecture currently dominated by the U.S.
Which is why the World Gold Council keeps referring to it as a key pillar or a fundamental bedrock supporting prices.
Precisely, because it's driven by these really deep-seated national policy imperatives, not just market noise.
So to really crystallize that point for you listening, what we're seeing are these deep, long-term geopolitical and risk management concerns. They're driving this massive asset allocation. It's not just short-term market timing.
Right, it's an insurance policy. An insurance policy against a highly interconnected and, potentially fractured future financial world.
And the consistency of the buying, that 14-month streak we keep coming back to.
That's crucial. It implies they are deliberately, but slowly, lowering the overall proportion of dollar reserves on their national balance sheet.
Without causing a panic by just selling all those dollars at once.
Exactly. They're just buying gold with incoming revenue.
Yeah.
It's basically engineering a slow, steady, quiet realignment. A statement executed persistently.
It's a statement that they want greater autonomy over their reserves.
Mm-hmm.
Okay. Now, while that 14-month streak gives us one narrative, a narrative of steady, transparent buying, there's a much murkier element that the financial sources we've examined are pointing to.
Mm.
And it's vital for understanding the true demand pressure on gold prices.
This is where it gets complicated.
Right. This is about the possibility of, let's say, opacity or underreporting in the official figures. We just talked about 42 tons of confirmed buying. But what if that's just the tip of the iceberg?
That's the tension that serious analysts are constantly grappling with. Central banks, particularly in large, centrally managed economies, don't always operate with, real-time transparency.
So the numbers they release might not be the whole picture?
There can be delays in reporting, or the accumulation might be handled through proxies like state-affiliated institutions before it's officially moved to the central bank's balance sheet, maybe years later.
And this isn't just speculation. This is where the detective work begins, because we have concrete evidence of this potential discrepancy.
A really massive one.
A massive one. Let's look at a specific, very illustrative example from September of last year, 2025.
Yeah, that month really provided a stark illustration of this potential gap. Goldman Sachs, which uses all sorts of tracking mechanisms and trade flow data to analyze what's really moving around the world, they estimated that China added a full 15 tons of gold to its reserves in September alone.
15 tons. That's already a huge purchase for a single month.
A very significant purchase.
Now, you take that reputable third-party estimate, 15 tons, and you contrast it with the country's official reported figure for that same period.
And that number was?
Around 1 ton.
1 ton.
1 ton versus 15 tons.
And what's fascinating here is just the sheer magnitude of that gap.
That's huge.
A 14-ton difference is not a rounding error. It's not trivial. When you see such a large divergence between a credible independent estimate and an official declaration, it really demands some critical thinking.
It suggests the real buying is much more aggressive.
It suggests that if the Goldman estimate is even close to correct, the actual accumulation rate is far more aggressive than the PBOC is publicly admitting.
And why would they do that?
Well, it could just be a reporting lag. That's possible. Or it could be a deliberate choice.
A strategic choice.
A strategic choice. Central banks might prefer not to signal their true buying power. Why would they? That action itself could drive up the price against them.
So they buy quietly.
They accumulate quietly, they report the minimum, and they manage market expectations while still hitting their strategic reserve goals.
Right.
Our sources strongly suggest this is a serious possibility.
So in essence, the 42 tons we can confirm over 14 months, that might just be the official, transparent slice of a much larger strategic reallocation?
Exactly. Which would make the underlying demand pressure on gold substantially stronger than what the market perceives if it only looks at official reports.
That's the key takeaway for the sophisticated learner, then.
I think so. The actual strategic demand from the official sector is likely the strongest it has been in many decades. And the lack of full transparency, paradoxically, only amplifies the supporting effect on prices.
How so?
Because even if they're only reporting 1 ton a month, the market is constantly left to wonder, did they actually buy 15? It creates this uncertainty.
It creates a narrative of enduring scarcity, backed by sovereign policy. Okay, so we've broken down two incredibly powerful drivers highlighted by our sources. First, that verifiable commitment.
The 14-month streak.
Yeah.
The 42 tons.
Right. And second, the profound strategic motivation, that currency diversification and hedging against the US dollar that's motivating the entire official sector. So what does this all mean for you, the learner, who's tracking these global financial shifts? If we pull all these different threads together, the current gold price surge, it seems fundamentally different from past rallies.
It feels different. It's built on a different foundation.
Exactly. It's not just driven by ephemeral fears of short-term inflation or, general economic volatility. It is being fueled by powerful long-term strategic decisions made at the highest national levels to fundamentally re-engineer their national balance sheets.
It's a tectonic. It's slow, but it's massive.
So we've established the scale of verifiable 42 tons since November 2024. We've identified the primary driver, this powerful strategic desire to de-risk national reserves away from the US dollar. And we've linked it to the global effect, consistent central bank demand acting as this major stabilizing force supporting record prices.
This is strategic asset allocation happening in real time. It's reshaping the entire commodities landscape right in front of us.
Right.
And that leads to a final, maybe provocative thought for you to consider on your own. We know this strategic reserve accumulation is a major support pillar. And we know there's significant evidence suggesting the actual accumulation pace might be substantially faster and larger than what's being officially reported.
The 15 tons versus 1 ton problem.
The 15 versus 1 problem. So if the true unacknowledged demand is what's really driving gold prices, what does that imply about the future stability of the gold market? What would happen if the PBOC ever chose to make its total accumulation more transparent?
Interesting.
Would that sudden transparency trigger a new, even higher price floor? Or would the market just sort of shrug and say it's priced in the long-suspected truth?
And what about trust in the system itself?
That's the broader question. If this lack of transparency in reserve reporting is allowing nations to strategically buy billions in gold without facing immediate market consequences, how long can that deliberate reporting disparity last? At what point does it start to fundamentally affect the trust that's required for accurate global commodity market analysis?
A very deep dive that only time will answer.
एक जरूरी बात, ये चैनल सिर्फ एजुकेशनल और इन्फॉर्मेशनल पर्पस के लिए है। बने रहिए हमारे साथ हर बड़ी कमोडिटी खबर के लिए सिर्फ कमोडिटी अपडेट्स पर। चैनल को सब्सक्राइब जरूर कीजिए और बेल आइकन दबाएं ताकि आप कोई भी इम्पोर्टेंट अपडेट मिस ना करें। धन्यवाद।